What's up, everybody? It is Sunday, June 26th, around 3 p.m. Eastern Time. It's time for the market analysis video. So, obviously, we're going to be talking about Brexit. So, that's the big thing. I did a little first reaction video the night of when it looked like Brexit was going to occur and that Britain was going to vote to leave the European Union. That is indeed exactly what happened. And we had quite a move on Friday. Obviously, large gap open and moved all over the place. Ended up selling off and ended. The SPY ended well down, maybe 3.5%, 4% down on the day on huge volume. And with gold, we see a similar situation, obviously to the reverse. So with gold, see it went up to the near-term highs and closed at 126 on the button, 126.01, and closed above those highs. So what's interesting is that with this Brexit, this is an uncertain vote. So in the sense that we're not 100% sure what the process is. This has never happened before. A country has never left the European Union. And so what that looks like and what will happen, what the result exactly will be, is unknown. So I think Friday was a general reaction, but I don't think any models have been run. I think people are still thinking about what's going to happen, trying to run the scenarios to see where this takes us. And so I would not be surprised if these large moves continue and we even gap for Monday a considerable degree. I think over the weekend there's probably been quite a scramble. There's been a lot of things being run, a lot of scenarios being talked about to see what exactly will happen. And so I think that this move isn't over yet. It's not like, oh, we had this move and now it's priced in. I think we had a general reaction, which makes sense. But I think there's further to go, probably to the same direction. So the SPY possibly to the downside, and gold to the upside, and the dollar. So this is interesting, to the dollar to the upside as well. So what we saw is the pound and the euro sold off quite a bit, and the yen and the US dollar were bought quite a bit and ended high, and along with that, gold as well. So we have Janet Yellen, I think, this week giving testimony. Obviously, it's going to be brought up. She's going to mention it, and I think the odds of a rate hike went way down now that Brexit has occurred, and even the odds of a rate cut, cutting possibly back the rate towards zero, is something that's being talked about, and I think something that might become a reality. We might go back to zero rates. So with that, I would think that the dollar, although it is a safe haven, I think it's limited in its gain, especially if Yellen comes out and gives an appropriately dovish tone, which I think she will. I think really the big winner here is gold if you want to go long something. Obviously, with the economy, oil is going to fall with this kind of uncertainty, and to an even greater extent, if you look at the SPY over the last year, really, and even longer, we haven't seen a whole lot of gains. We've seen chop. We had this down swell here at the beginning of the year, and this could be tip the scale towards risk aversion, and the idea that moving out of stocks and into safer assets like gold, like cash, and like treasury bonds. And so with that, this could be the beginning of a larger correction. We'll have to wait and see, but I think it's possible. And if that's the case, obviously a dovish tone by the Fed is more appropriate, and we should see gold rise from this. So that's really kind of a lot of bets are off the table. I would plan to sit on the sidelines with the exception of gold. I do have a considerable position in gold myself, but that's obviously all discretionary. That's where I'm headed. But if we look at the SPY here, we actually closed right at this resistance, this support level, and so we've got support again at the 200-day moving average, but with such a large move, it'll be interesting to see. We have the very real possibility of driving significantly lower from here. I don't think there's a lot of upside to be had in this decision in the near term. In the near term, that doesn't mean that we can't stop the bleeding around this level, but I don't see a whole lot of upside in the market off of this decision. And I think it frames, the mindset of the markets more in a fearful, more risk-averse attitude versus this chasing gains attitude, the attitude of chasing gains and chasing a reward in the marketplace. I think this puts people more on the defensive, and so I think volatility will rise. I think we've got at least a few more days of large moves ahead, and so trader beware. I think there's obviously going to be an opportunity to make a lot of money, but this is not your normal trading environment right now, and I don't think it will be for the next, we'll say the next week. So with that being said, it'll be very interesting to see how the leaders of their respective countries in the European Union and Janet Yellen and all these handle this situation. What's going to come light as to what the process is. But in the meantime, I think being very careful in your positioning, and I think the momentum is certainly to the bearish side for right now. Now what's great is this if this is indeed the start of a correction, I can see how this could be a setup nicely for buying opportunities down the road.